Good day to everyone. On the behalf of Hindalco Industries, I'll welcome you all to the earnings call for the fourth quarter and the full year 2018. On this call, we'll be referring to the investor presentation, which is already uploaded in our company website. So some of the information on the call may be forward-looking in nature and will be covered by the safe harbor language on slide number 2 of the presentation. I would like to inform you that the financials include the relevant numbers of Utkal Alumina International Limited from its audited accounts to prepare a comprehensive view of the business. For this purpose, standard principles of consolidation have been applied by the elimination of intercompany transactions and unrealized profit or loss in the inventories. For comparison, previous year's numbers have also been presented in a similar manner. The audited Hindalco's standalone and consolidated results in the SEBI format have been provided in our company website, and a summary is included in the appendix section of our presentation. On today's call, we have with us Mr. Satish Pai, our Managing Director, along with Mr. Praveen Maheshwari, our Chief Financial Officer, and Mr. J.C. Latta, Head of our Corporate Business. Now let me hand over this call to Mr. Pai for his opening remarks. Thank you, and over to you, sir.
Thank you, Subir. Good evening or morning, everyone. Welcome to our earnings call for the fourth quarter and FY 2018 for Hindalco Industries Limited. And as stated, we have made some changes in the presentation of our numbers for better understanding. Let's move on to slide 3. So I'll start by giving you the key consolidated highlights of the company performance in the financial year 2018, including business updates. This will be followed by an update on macroeconomic and industrial environment and highlights of the results. Later, I'll cover the operating performance for all our segments in more detail, and Praveen will elaborate on the financial performance. Let me start with the key highlights, starting with slide number 5. It was a record-breaking performance for Hindalco this year. On the consolidated performance, profit after tax of the company has trebled to 6,083 crores, up by 220% over FY17. The PBT before exceptional item has almost doubled to 6,508 crore, up by 94% versus FY17. The company has delivered a highest ever EBITDA of 15,025 crores in FY18, up 11% versus FY17. This was driven by stable operations, better realization, and supportive macros. Both our Indian businesses that have achieved higher ever production numbers, as well as Novelis, our overseas subsidiary, has reported highest shipments of 3.2 million tons in FY18. Similarly, our Indian operations has reported a record EBITDA of 7,154 crores in FY18 versus 6,441 crore, up by 11% compared to FY17 on the back of stable operations and supportive macros. This is despite significant increases in the costs of major inputs like caustic and carbon products. PBT and PAT were up by 58 and 36% respectively compared to FY17, demonstrating our strong financial performance. In FY18, we prepaid 7,966 crore of our long-term project loans in India. As a result, the net debt to EBITDA on the consol basis stands at 2.82 times at the end of FY18 versus 3.74 times at the end of FY17. Slide number 6. The company achieved record aluminium and alumina production at 1.29 million tons and 2.88 million tons respectively. All our plants operated at its design capacities with stable efficiencies. In FY18, our aluminium EBITDA was at 4,790 crores, up 17% versus FY17, with an EBITDA margin of 22.7, which was the highest in the last 6 years. This is despite the fact that the business faced strong headwinds due to oversupplied domestic markets and surge in input costs, particularly in carbon and caustic soda. The copper business also reported very good financial results with an EBITDA of 1,539 crores in FY18, higher by 6% over FY17 due to higher volumes and better realization in value-added products. Cathode production was highest ever at 410 KT in FY18, which was 9% higher than FY17. The copper rod production stood at 156 KT in FY18, higher by 4% as compared to FY17. I'm also happy to announce that the new continuous cost rod plant was commissioned towards the end of FY18. Coming to Novelis' performance, I hope you must have already gone through their full financial results declared on 8th May. I will just share with you the key highlights of its performance. Novelis has reported a record performance in FY18 with a PAT of 635 million versus 45 million last year, and an all-time high adjusted EBITDA of $1.215 billion, up 12% over FY17. Novelis also reported a record free cash flow of 406 million in FY18. Overall product shipments increased by 4% in 18 to 3.2 million tons. Its continuous focus on automotive has helped achieve 11% growth in auto shipments in FY18 versus FY17, with the share of auto shipments increasing from 18% in FY17 to 20% in FY18. Novelis sold approximately 50% of its ownership in its Ulsan facilities in South Korea to Kobe Steel for 314 million, which helped to unlock value and solidify its market-leading position in automotive aluminium sheet. Inputs from recycled material increased from 57 to 55% in FY17. Let's now look at the broader economic environment in slide 8. The global economy grew by 3.8% in CY 2017, the fastest since 2011. According to IMF, supportive financial conditions are expected to drive global growth to 3.9% in both CY 2018 and CY 2019. In Q4 CY 17, US GDP increased by 2.9%, driven by consumer spending, which accelerated at its fastest pace in 3 years. According to advanced estimates released by the Bureau of Economic Analysis, US GDP increased by 2.3% in Q1 CY18. China's GDP expanded by 6.8% in Q1 CY18 on account of strong consumer demand, healthy exports, and robust property investment. However, a surge in crude oil prices and geopolitical tensions and the emergence of a wave of protectionism may impact global growth momentum. On the domestic front, the overall economic growth picked pace in the second half of FY18. This is evident from the GDP growth numbers. In Q3 FY18, it registered a growth of 7.2% versus 6.5% in Q2 FY18 and 6.8% in Q3 FY17. The manufacturing PMI improved for the ninth consecutive month in April 18. According to RBI, GDP growth is projected to strengthen from 6.6% in FY18 to 7.4% in FY19. IMD has forecast a normal monsoon in this year. Now I move on to the aluminium industry overview in the next slide. Since the beginning of CY18, LME price of aluminium has been very volatile. It all started with an apprehension of lower than anticipated capacity cuts in China under the environmental reforms, were followed by disruptions at the Alunorte refinery in Brazil, and then came the imposition of 10% tariff by US on aluminium imports in order to revive the domestic aluminium industry. However, the US has temporarily exempted some of its trading partners like Canada, Mexico, South Korea, the European Union, Australia, and Argentina. As a result, some of the major producers of the US has announced restarts of their smelters. In retaliation to US tariffs, China imposed 25% duty on scrap imports from the US. Premiums in all the major markets witnessed an increase due to the aforesaid events and also due to robust demand. US and Europe are expected to generate robust demand, majorly driven by transport and construction sectors. In China, construction sector witnessed moderation in Q1 CY18 and is expected to recover from Q2 CY18. China is focusing on increasing the intensity of aluminium usage in electric vehicles, which will generate additional demand for aluminium in China. The next slide talks about the domestic industry outlook on aluminium. In Q4 FY18, LME recorded an increase of 21% year-on-year. For domestic players, the appreciation of the rupee against the US dollar by 4% to 64.5 rupees a dollar partially offset the impact of the elevated LME in Q4 FY18. NJP premiums continue to increase for the third consecutive quarters to US dollar 108 per metric ton from US dollar 94.4 per metric ton in Q3 FY18. The average premium for FY18 touched US dollar 111 per metric ton, registering a growth of 18% year-on-year. Domestic demand increased significantly in FY18 by 9% on year as compared to a growth of 1.5% in FY17. The demand growth came in the second half of FY18 after subdued first half. Imports are catering to more than 50% of the market, which is a major concern for domestic producers, especially after the imposition of tariffs by US, because producers from China and Middle East are likely to divert their additional metal to the Indian market. I'll now move on to slide number 11 on the copper industry overview. Growth in the global refined copper consumption is expected to grow around 2.5 to 3.1% year-on-year to 23 million tons in CY18, whereas copper mine production is expected to grow to 1.4% to 17 million tons in CY18. As we all know, the annual benchmark TCRC for CY18 is set at 11% lower as compared to the previous year. It is expected that due to the lack of availability of concentrate in the global market, coupled with a continuous increase in the Chinese smelting capacity, spot TCRCs will continue to be under pressure throughout the year. Fear of disruptions which may arise during labor negotiations in the mine may put additional pressure on spot TCRC. LME price of copper also witnessed volatility in Q4 FY18 due to trade protection measures implemented by the US. However, copper LME registered a growth of 19% year-on-year in Q4 FY18 and 25% year-on-year in FY18. Domestic demand for primary copper registered a degrowth for the second consecutive year of 2.5% in FY18, in addition to a degrowth of 3% in FY17 on account of subdued demand in the power segment. However, in Q4 FY18, demand recovery was witnessed and recorded a growth of 4% year-on-year. Now let me give you some thoughts on the market dynamics for Novelis in slide number 12. With respect to the markets in which Novelis is operating, the demand for aluminium flat roll products, mainly beverage cans, auto and specialty, remains strong. It remained high for beverage cans as the market for beverage cans has grown at a CAGR of 4% between 2010 to 2017, and this market is expected to grow at the same pace in the coming years, where Novelis has approximately 34% market share. On the automotive side, aluminium-intensive vehicles continue to be a core part of the market with increased adoption of aluminium globally. The use of aluminium in auto market has also grown at a CAGR of 76% between 2010 to 2017. Novelis market share in this is 45%. Novelis has approximately 5% market share in the specialty business, and that has grown at a CAGR of 5% between 2010 and 2017. Now let me come to the operating performance of the businesses for the quarter and the full year on slide 15. To start with the aluminium operations on slide number 15, aluminium units continued to operate close to their design capacities. Alumina production was 710 KT for Q4 FY18 and 2.88 million tons for FY18, reflecting consistent manufacturing performance by all the plants. Aluminium production was at 320 KT for Q4 FY18 and 1.29 million tons for the full year FY18, reflecting stable performance. On the value-added side, production was maintained during the quarter and FY18 despite challenges with respect to continuous increase in Chinese imports. Moving on to the operating performance of our copper business in slide number 17. In FY18, production of cathode was 410 KT in FY18, and this was the highest ever production achieved by the copper plant. Copper rod production stood at 41 KT in Q4 FY18 and 156 KT for the full year 18. I am happy to announce that our new continuous cast rod plant project was commissioned and is under ramp up. DAP production was lower due to operational issues at 30 KT in the quarter and 205 KT in full year 18. The operational issues are now resolved. I will now cover the operational performance of Novelis in brief. Coming to slide 19, total FRP shipments was a record high at 805 KT in Q4 FY18 and 3.2 million tons full year 18. This was supported by increase in automotive shipments at 20%. Significant cost reduction through improvement in productivity, asset utilization, increased recycling, increased customer satisfaction and better metal mix helped Novelis to drive these strong results. It continues to invest in automotive finishing capacity. The recent announcement of adding approximately 200 KT capacity of auto finishing lines in Guthrie, Kentucky is a major step in this direction, helping to maintain its global market leadership position. With that, I'll now hand over the call to Praveen for a more detailed review of our financial performance.
Thanks, Satish. I'm on slide 21. This gives a brief snapshot of the key numbers for our financial performance during quarter number 4 and FY18 full year for Hindalco standalone plus Utkal. As we mentioned earlier, this presentation has been modified to include the financials of Utkal to present a comprehensive picture. Revenues in FY18 stand at 43,451 crore versus 39,724 crore in FY17, supported by higher aluminum and copper volumes and better realizations. EBITDA at 7,154 crores in FY18 was up by 11% on account of better output and realizations. Profit before tax and before exceptional items jumped to 3,023 crores in FY18, showing a significant increase by 58% compared to FY17 due to strong overall business performance and savings in interest outflow. As compared to the previous year, the interest expense was lower by 21% due to prepayment and repricing of long-term loans in India. Profit after tax at 1934 crores in FY18 was up by 36% versus FY17. This was after absorbing the negative impact of net exceptional expenses to the tune of 313 crores in FY18 versus an 85 crore gain in FY17. So there's a swing of almost 400 crores between the 2 years. Net profit for Q4 FY18 stands at 616 crores, which is up by 13% year-on-year. Now I'll move on to segment-wise performance. On slide 22, we have given the performance of our Indian aluminum business, which includes the financials of Utkal as well. Revenue for aluminum segment for FY18 was 21,089 crores versus 20,327 crores in FY17. Higher metal realization, volumes, and stable operations resulted in higher EBITDA for this segment, despite significant increase in carbon and caustic prices. EBITDA for aluminum business was 4,790 crore rupees in FY18, up 17% over FY17. If you wish to know the separate Hindalco standalone results, they are available in the appendix to the presentation. Coming to the financial performance of copper business on slide 23, higher rupee LME and volumes boosted copper revenue to 22,371 crore in FY18 versus 19,408 crore in FY17. EBITDA for FY18 was 1,539 crore rupees, up 6% compared to FY17 due to higher volumes and better byproduct realization. I will now take you through the financial highlights of Novelis on slide 24. Net sales of Novelis increased 17% to USD $3.1 billion in Q4 FY18 and up by 20% at USD $11.5 billion in FY18 over the previous year. This was mainly driven by higher total shipments and higher average aluminum prices. Adjusted EBITDA for Q4 FY18 stood at $319 million, up 9% year-on-year. For the full year FY18, the adjusted EBITDA was $1.215 billion, which was also up 12% compared to the previous year, mainly on the back of higher auto shipments, operating efficiencies, better metal mix with higher percentage of recycled content. In Q4 FY18, we achieved a record adjusted EBITDA per ton at $396, reflecting a continuous strong performance of Novelis year after year. Now I move to the next slide, which gives a snapshot of our consolidated financial performance for FY18 versus FY17. Consolidated revenues have grown to 1,15,809 crore in FY18 compared to 1,02,631 crores in FY17 on the back of excellent operating performance of all the businesses and better realizations. Consolidated EBITDA has grown by 11% at 15,025 crores as every business has done well in FY18. Finance cost has reduced by 32% year-on-year on account of prepayment and repricing of long-term loans in India and refinancing of senior notes and term loans in Novelis in the previous year. Profit before tax and exceptional items was up 94% at 6,508 crores in FY18 on account of strong overall business performance and savings in interest outflow. PAT has tripled at 6,083 crores in FY18 and is up by 220% compared to FY17. This has included an exceptional gain of 1,774 crores reported on account of sale of 50% share of Ulsan, South Korea facility under Novelis in FY18. With this, let me hand over to Satish for his final comments on the overall business performance and key takeaways.
So let me now summarize on slide 26 our overall performance and some key risks. During FY18, despite sharp increase in input costs and oversupplied domestic market situation, the company's financial performance was robust on the back of stable operations and favorable macros. We have already prepaid long-term loans close to 8,000 crores in FY18, and this has led to significant savings in the finance costs and strengthens our balance sheet. By this deleveraging effort, consolidated net debt EBITDA was down to 2.82 at the end of FY18. With stronger balance sheet, we are now in a better position to withstand commodity cycles. All the businesses continue to generate positive free cash flows year after year, providing the requisite funds to utilize for investment in growth opportunities. We have successfully commissioned the copper rod 3 in copper well in time. The copper plant will take a regular maintenance shutdown, this is the smelter 3, in Q1 FY19 lasting 30 to 40 days. This will help to enhance its efficiency going forward. The company is also evaluating investments in aluminium downstream facilities with the objective of enriching its product mix. Our Utkal plant remains the most efficient producer of alumina globally and continues to provide strong support to the upstream aluminium business. Work on the Utkal brownfield capacity expansion by 500 KT has commenced and is expected to be completed in 30 months with a capital outlay of around 1,300 crores. Novelis continues to focus on auto segments to be the partner of choice for innovative solutions and supported by improving operational efficiencies with its focus on auto segment leading to better margins and improved free cash flow. Buoyant demand and market recovery across businesses in India augur well for our Indian operations. Major input costs are expected to stabilize in the coming quarters. However, increasing imports and domestic oversupply will continue to remain a challenge. The volatility in aluminium prices still continues, and the changing macros on account of recent trade developments is impacting the global demand-supply dynamics. With that, I thank you very much for your attention, and the forum is now open for questions you may have.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Anshuman Atri from Premji Investment. Please go ahead.
Yeah, thank you for the opportunity.
Mr. Anshuman Atri, we can't hear you. Could you please speak a little louder?
Yeah, thank you for the opportunity. So my question is regarding duties on the import. So we have seen Indian steel market recovering on back of duties, but are there anything similar which we can expect on aluminum given that we are seeing increase in imports?
So the steel actually benefited from an MIP rather than duties per se, because the problem for imports into India is most of it comes from FTA countries, and hence the duties do not really stop imports coming in. So the discussion which we are having with the government is actually to use quantitative restrictions. And QR, the concept of QR is actually you try to limit the total number of imports to a certain volume, could be the average of the last 3 years or 5 years. And we think that that is a better mechanism, because otherwise most of the imports of aluminium and copper coming into India are coming in from FTA countries at zero duty. So per se, the duty going up will not stop the imports.
Okay, so when can we expect this?
So this, we have been, as the Rusal story unfolded, you may realize now that there is a huge amount of Russian metal. There are duties on Chinese imports to the US. So our worry is that a certain amount of dumping will take place into India from China. And we have already approached through the Aluminium Association, the government authorities, who have now taken cognizance that this could happen. And we are now working very diligently and as fast as we can with them now. I think that's all I can say at this point.
Okay, sir. Lastly, on the premiums, we are seeing increase in premiums. So are you seeing physical market availability becoming an issue right now?
So look, there are two different stories here. I think that on the Korean and Japanese markets, the spot premiums have jumped up because the stocks in the warehouses are at low. So there is certainly a little bit of tightening of the market on the international export side. On the Indian side, all I can tell you is that there is actually an oversupply in the market right now. There is a lot of imports coming in, a lot of fake semis coming in, and there is enough supply in the Indian market. So the international premiums, unfortunately, are not being realized in the Indian domestic market. There is a discount to the MJP in India right now.
Thank you, sir.
Thank you. The next question is from Rajesh Lachani from HSBC. Please go ahead.
Yeah, thanks for the opportunity. My question is with regards to this 500 KT alumina expansion. Are we also looking forward to expansion in the aluminium segment?
The aluminium segment, not right now. I think what we are going to do in the next year is that we're going to expand the alumina, because I guess you guys must have noticed we are putting Hindalco plus Utkal together, because the alumina prices have gone through the roof. And for us in India, the alumina is all for captive usage for our aluminium. And hence the Hindalco plus Utkal gives you the right result. Now, we are doing this 500 KT expansion pretty fast because we think that the worldwide third-party alumina market will remain tight, because Alu Norte has not been allowed to come back to its full capacity. So the aluminium prices are north of $500 now. So we will take advantage of the alumina market. The aluminium expansion in India, we will wait for some time more because we still need to be a little bit careful about coal availability and coal pricing going forward. Right now, the coal prices in India are under control, but we'll have to see going forward because there could be some tightness in the next few years. If more coal mines come into the market, coal supply is adequate, then we will certainly start to think of doing a brownfield expansion in Aditya or Mahan.
Okay, thanks. And sir, the second question is on the CCR project that you have recently commissioned. Sir, the margins for copper segment, EBITDA margin has been around 7.5% in FY17 and 7% in FY18. What are the margins that we can expect due to this project?
So look, those, the copper, of course, as the LME goes up, you see those margins. But for the copper rod, I'll tell you the advantage. Today we are selling 156 KT of copper rod, and we are selling the rest of our 410 KT as cathodes. As this CCR3 comes in, we will have another 200 odd KT of copper rod coming into the Indian market. And roughly you will make about $200 per ton more when you sell copper rod versus selling cathode.
And so what is the additional cost involved?
So I've already given you the EBITDA, so I've taken the cost into account.
Okay.
We will make $200 per ton more. And in next year's budget, last year we produced 156 KT of copper rod. You can add another 90 KT from CCR3 next year. And on that 90 KT, you will get an additional $200 per ton rather than we selling that as cathode.
Understood, sir. That's very clear.
Thank you. Next question is from Sumangal Nivedia from Macquarie. Please go ahead.
Yeah, thanks for the chance. So if you could just share what is the latest hedge position for FY19 and what could be the average cost of it?
So I was waiting for that question. So I've got to give you guys some I've been told to give you very clear numbers now. So look, hedging, as I said, on an upward LME market, from the last call I told you, we will not do more than 30%. So where are we for FY19? So we have currently hedged 28% of the volume at a rupee LME. I have to give you the rupee because the rupee is pretty volatile. Now today it's at 68%. So the rupee LME of 1,38,574. So at the current exchange rate, when I wrote this it was 67, today it's 68. The effective LME of that 28% is $2,100. Now in the last month or so, as this Rusal thing was happening, we hedged another 12% on the commodity only at about $2,270. So that is our current hedge position. So we are not going to increase that hedge position going forward quarter on quarter because we think the LME has got strength and probably an upside.
So it's 28% and 12%.
Yeah, the 12% is commodity only at $2,270. The rupee part is open.
Okay, understand. So around 28% at $2,100 and 12 at $2,270. Understood. Okay.
Yeah.
Okay. So next is on the overall aluminium cost, when we look at total with respect to caustic, carbon, etc. So how do you see that shaping up in 1Q or rather 1H FY19? And also if you could share what is the coal scenario in terms of shortage supply from Coal India and captive coal?
Yeah. So in Q4, we probably hit the peak of our cost of production of aluminium. It was more than I expected. In Q3, I had told you 2 to 3% increase. Actually, it turned out to be about 6% increase. So in Q4, we hit about a 6% increase. Now, the good news is our coal costs are flat. In Q4, if you remember, Coal India increased the price somewhere on January 7th or 8th. But because of higher linkage coming in and better GCV, we managed to keep the coal cost flat. And even in April and May, that trend is continuing. So what I see going forward for the first half of the year is that our Q4 cost of production is being sustained, is flat. So we have a situation now where I'm getting an LME which is higher, but our cost of production is flat. The alumina is of course high, but because we are fully integrated, that does not have an impact on us. Coal prices will be flat with Q4. CP coke pitch, which was the biggest culprits, we have now managed to lock in at the Q4 rates for the next 6 months at least.
Understand. And just one last question on the aluminium VAP. We're seeing, last couple of quarters we've been mentioning that focus is on increasing VAP volumes, but that remains flat YOY. So are we currently capacity constrained in that, or it's more of a demand issue?
It was more of a demand. It was more of a demand because, as I said, if you remember the Q3 call, right up to October, the demand was flat year on year with the GST and all that. So demand started to pick up November, December. So it's really a Q4 where the demand has really started to pick up. That's one point. The second thing is there is a lot of fake semis and finished products coming in from China and Malaysia through zero duty as well. So we are not really capacity constrained. In fact, we have budgeted downstream products to be up 12% compared to FY18 in our budget.
Okay, and when we are talking about expansion there, what is the time frame and quantum of expansion?
So I think you're going to see this expansion over the next 5 years, so 12% next year. What have we put into the CAPEX? So let me give you the CAPEX guidance as well. We are doing this year about 1,600 crores compared to 1,100 crores last year. And most of this CAPEX is going into these growth projects. So one part of it will be taken by Utkal, but we are also putting it into more foil mills, more extrusion presses, trying to improve some of the equipment around the roll products. So we have started the downstream expansion project. So you will see now over the next few years, and we will maintain this sort of level of CAPEX. If you remember, I had said we'll be spending about 5,000 crores on downstream projects over the next 5 years. So you should see every year a 10-12% increase in our volumes on the downstream side.
Understand. That's very clear. Thanks and all the best, sir.
Yeah, thank you.
Thank you. Next question is from Pinakin Parekh from JP Morgan. Please go ahead.
Yeah, sir, thank you very much. As we look at the aluminum and alumina markets, the Hindalco's balance sheet, there is flexibility to add...
Mr. Pinakin Parekh, I'm sorry to interrupt, but you need to speak a little louder. We can't really hear you very well.
Sure. So just looking at Hindalco's balance sheet and the state of aluminum markets and the growth optionality that is there, are we running the risk that by the time we decide to undertake a brownfield aluminum expansion, and given the time lag that it takes in India, we run the risk of losing the best of the aluminum market, because the market's outlook is obviously tight for the next 2 to 3 years, and even if we decide to do a expansion now, it could still be 3 to 4 years before the brownfield aluminum capacities come on stream. So how would you view this?
It's a good question. I'll tell you one thing. When we do the economics of aluminium expansion today, at the current cost of capital of Hindalco, which is about 11.5%, and we take the coal costs and the costs that we have today, you will barely hit an IRR of 8%, Pinakin.
Okay, sir.
So that's why I go around and say that for me, to make a brownfield expansion will need about a 9,000 crore investment to, let's say, put another 360 KT brownfield in Aditya where we already have the land. The power costs in India, which we have pointed out to the government, are probably the highest in the world, with all these cesses, electricity duty hitting us. So until we get some real clarity on coal, power costs, and regulations, the brownfield to make an economic case today, and we are, depends, as you said, by the time it comes in, it will be 2 to 3 years. So we need to make sure that the LME as well, and we are waiting to see what happens in China. Will China be disciplined? So otherwise, if you remember, 1 quarter ago we were worried that after the Chinese winter season, if they bring back their capacity, LME could again come down below 2,000. So we think right now it's sort of safer to play alumina, where I'm quite confident you're going to get the upside, and play the downstream, which is to the strength of the Indian economy and which is not so LME dependent. And I know I can get $100, $150 a ton of EBITDA more on the metal. So that's the route we are taking. We are, by the way, doing the evaluation and all for the brown steel expansion as we talk. So it's not that we are not, both for copper and aluminium, we are putting the numbers and checking it out.
Understood, sir. And so secondly, on the copper segment profitability for this quarter, was the Q1Q decline, I mean, it fell from 420 to 329 crores, was essentially driven by the lower DAP production, or is there something else? How should we look at it going forward?
So you hit one part of it, which was the DAP production. DAP production was half of what it should be, because we had to take a shutdown of the phosphoric acid plant to fix it, which is now fixed. So Q1 should be very strong. And the second thing that happened is, we had a lot of imports coming in zero duty. So we had to cut the premiums that we charge in the Indian market. So those two had an impact of bringing it down. Now, in reality is, normally the copper EBITDA should be around 350 to 370. The Q3 was quite high at 421. And very often in copper, you do get some other noise coming in that can make the EBITDA go up. But generally, we should be around 350 to 370 going forward. I also want to add that Q1 will be impacted by the smelter 3 shutdown we will take. It will probably start at the middle of June and go into July. So we will be taking that smelter 3 shutdown in copper. The positive part for the copper is, as the copper rod 3 has come into production, so during Q2, Q3, Q4, we are going to recover quite strongly.
Understood. Thank you very much, sir.
Yeah.
Thank you. Next question is from Saumil Mehta from BNP Mutual Fund. Please go ahead.
Yeah, thanks. My questions have been answered. Thank you.
Thank you. We'll move to the next question. Next question is from Indrajit Agarwal from Goldman Sachs. Please go ahead.
Hello, sir. Thank you for the opportunity. 3 questions from my side. First, sir, on the 350 to 370 crores guidance that you have given, does that include the incremental EBITDA from CCR3 as well, or will that be additional to that?
Good question. I think that the ramp-up of CCR3 is going to take place Q1, Q2, Q3, Q4. So I think the full impact of the CCR3 is probably going to come Q3, Q4. So the 350, 370 probably could have a little bit more upside by the time we get to Q4 and CCR3 is ramped up. The other part, which to Pinakin's question, which probably want to add, is sulfuric acid prices and DAP prices are also very strong right now. It's higher than what we thought when we made the budget. So there could be more upside from those as well.
Sure, and that is helpful, sir. And, sir, can you give us some guidance on how much will be the volume loss because of smelter shutdown in copper?
Year on year, we are not budgeting a volume loss. So we did 410 KT of copper this year, and actually we have taken 416 as the budget for next year. So there won't be any volume loss, because as soon as you finish the upgradation, we can get better feed-through rates and the volume goes up. So we will be producing more or less the same or slightly higher compared to last year.
Sure.
It's just that the impact on Q1 could be there a little bit. That's why I raised that point.
Sure. So this is helpful. Sir, any thoughts on dividend policy, increasing dividend now that we have CAPEX under control, reasonably strong free cash flow generation?
I thought if you just look at our what we have told SEBI, we have now put in 120% as the dividend rate. So we have upped the dividend.
Sure. All right. And sir, last actually one housekeeping questions. In the table that you have given in press release, the EBITDA distribution that you have given, right? So that is like 4,790 crore for standalone for FY18.
So look, as we were trying to explain this concept of standalone, the standalone used to represent Hindalco without Utkal.
Right.
Now, what we are saying is that all the alumina of Utkal is going into the aluminium business of Hindalco. So the results that need to be looked at, and my request I was going to make at the end, everyone to give consensus also, is on the Hindalco standalone plus Utkal. And hence, going forward, all our analysis, all our press releases are Hindalco standalone plus Utkal. So the 4790, because if you take Q4, the transfer price was $435 for alumina to the Hindalco business. So all that, a profit is sitting in Utkal, which impacts the COP of aluminium in Hindalco standalone.
Yes, sir, this is helpful. What I was wondering was, why is the difference between this amount in standalone and consolidated? In standalone, it's 4790. In consolidated, it's 4692.
That has, sorry. Which number are you?
This is, you see, this includes, there are a couple of smaller operations as well. We have a unit in Brazil, for example, which is still ramping up.
Ouro Preto, so there's some negatives there.
So there will be some negative from there. So that's a small negative there.
Sure. That's all from my side. Thank you.
Thank you. Next question is from Amit Dixit from Edelweiss. Please go ahead.
Thanks for taking my question, sir. I have a couple of questions. One is on the cost of production. Is it possible to quantify in dollar per ton terms the cost of production at Aditya and Mahan and Utkal?
So, I cannot give you the Aditya and Mahan, but let me tell you that our combined cost of production for all of aluminium in Hindalco is today roughly below $1,700 per ton, and we think that we're going to continue at that level.
Sure, so that is helpful. And what about Utkal, cost of production of alumina?
So cost of Utkal in alumina is, from a dollar point of view, it's about $170.
$170. And what was the production at Utkal in this quarter?
Utkal production was 360. It's there on slide 15, 360 KT.
Okay, I missed it probably.
Oh, sorry, that's Utkal.
Okay, fair enough. And depreciation was higher in this quarter, possibly due to commissioning of CC3. Is the assumption correct?
No, you mean the total Hindalco depreciation?
Standalone depreciation.
The standalone depreciation, Praveen, you may want to explain.
Depreciation is not CCR3. No.
CCR3 is not there to that extent. It's, one is the progressive capitalization. And there was a small change in the, in one of the standards in accounting, whereby the mining expenses were taken into the depreciation part. So that's a small one, and I don't think it's going to continue for too long, because that's just the stripping expenses of a particular mine.
But by the way, we take pot relining as the normal expense. We don't capitalize it.
So, sir, what would be approximately quarterly running rate of depreciation? Since you said there are some one-offs over there, so I just wanted to call you.
So quarterly, it not be much different, slightly lower than what you've seen just now.
Okay, fair enough. Thanks, sir. Thanks so much.
Thank you. Next question is from Alok Ramachandra from Future Generali. Please go ahead.
Yeah, so thank you for taking my question. Wanted to know the alumina transfer price from Utkal to...
That's what I said. The last quarter was $435.
$435. And what is the PAT for the Utkal alumina business per se?
See, the PAT, that's why we combined it, because you have to eliminate the inventory and things like that. So do you have the PAT for Utkal?
PAT for Utkal separately we do have, but you should look at the PAT that we have given in the table, because that really reflects the PAT of the consolidated results.
Taking away the inventory that is sitting. That's why
in the consolidation, you need to remove the impact of unrealized profit sitting in the inventory. So the way you should normally do consolidation is how we have done the consolidation here. And the PAT as per that is For Q4 is 616 crores, and for the full year is 1934 crores.
And any further guidance on alumina prices in terms of that will substantially impact?
Look, again, for Hindalco plus Utkal, the alumina price only matters to the amount of the 100 KT that we may sell, which we have excess. Otherwise, it's into the integrated cost of our metal. But if you just ask me, I think because Alunorte has not been allowed to ramp up, alumina prices will be in the 500 range is my feeling.
And what is your assumption that how long this entire system will actually go ahead with?
Good. Honestly, I don't know because Norsk Hydro was very confident when they went to the court last time, but somehow they didn't get the clearance. So at this stage, I do not have any better guess than you.
All right. Thank you so much.
Yeah.
Thank you. Next question is from Abhishek Poddar from Kotak Securities. Please go ahead.
Hi, sir. Thanks for taking my question. So first question regarding the hedging. Just need one clarification. Earlier in the statement, you made that you will not see increase in hedging position quarter on quarter. So, sir, by that, do we mean that the 40% hedging way that we have done, that is the hedge for FY19, or the 40% limit will not be crossed quarter on quarter?
No, what I was saying is that at this stage, I don't think we are going to hedge any more this year.
Okay.
Now, if we do get some very good positions close by, for example, when it spiked to 2,600, there was a backwardation of $240. So we could not take advantage of it because the spot was high, but even 1 month out was quite low. So we will continue to watch the commodity, but I don't think we will expand our hedge positions too much now. We are looking at next year and year after because there we are starting to see some good levels. So, our core hedges, as I tell you, we like to keep at least our core hedges of 20 to 30% for the next year by the time we reach October, November of this year.
Okay, sir. So second question is regarding the aluminum. This year we did 1.29 million tons. So is that the maximum we can do, or through better asset sweating, can that volume increase more?
It can increase a little bit more, but not too much. Not too much.
Okay, so this is something not that we are aggressively working for right now.
No, I honestly, if you take which is a very important point, Hindalco's strength has been the stability of its operations. We've not lost pots, we have not had pot shutdowns. So I think that, we run the machine for stability, at least from the aluminium side. I think that, we'll put more of our energy in trying to get more downstream products up because that gives the excess EBITDA.
Okay. And so just a last question, if you could give us the consolidated net debt and the standalone net debt as on March 18?
Yeah, so the net debt for March 18 standalone is about 17,000 crores.
By the way, standalone means?
Including Utkal.
So, let's be very clear.
Yeah. So we're talking of the Indian operations. And we look at it that way even internally because whether it is in Utkal or in Hindalco, it doesn't matter. Anyway, it's 100% subsidiary. So that's the 17,000 crore position between Hindalco and Utkal. And consolidated is about 39,000 crores along with Novelis.
Okay. Thanks a lot, sir. All the best.
Thank you. Next question is from Bhaskar Basu from Jefferies. Please go ahead.
Yeah, just two questions. One, on the power cost, this quarter there seems to be on a per ton basis almost a $35 per ton increase. I'm just basically dividing power cost by aluminum volumes, which I assume would be primarily the main source of the power cost, while you've kind of indicated that coal costs have been largely stable on a sequential basis. So just wanted to understand the reason there.
No, honestly, our power cost has not gone up. So I think you're going by the SEBI...
Yes. The power and fuel line item, basically, which has gone up from 14.7 billion to about 15.3.
Sorry? Oh, okay. So my guys are telling me really what has happened there is in the NCR region, they put a ban on furnace oil. So we had to switch from furnace oil to LDO for the alumina refinery in Renukut. So that has led to an increase in the fuel cost.
Oh, okay.
Our coal cost and our power cost has not gone up.
So coal costs have been stable despite the Coal India price hike?
That's correct.
As you mentioned.
Yes.
Okay. And in terms of the coal mix which you're receiving, including captive, what would be the mix there between e-auction, captive?
So, you know, this is depends on the linkage realization, but in Q4, the linkage was higher. So the amount we got from e-auction, if you have the numbers there, I think, take it out, was much lower than Q3. So, option guy. So I think that, you know, right now we are about 20% from our captive mines, and roughly 60 to 65% we are getting from linkages, and the rest we get from auction.
Rest from auction. Yes. And of this, the Krishna Shila linkage is due for expiry, I think, sometime in June, I guess.
That's right. It will come at the end of June, and it will come on auction at the same time.
Do you expect any disruption in terms of the supply there, or that should not be impacted?
As you know, we have a belt pipe conveyor, and we think that we will not have a disruption from the Krishna Shila mine.
Okay. And just one housekeeping question on the same net debt numbers. If you can break it between gross debt and cash, that would be helpful.
Yeah, sure. I can do that. So gross debt for Hindalco plus Utkal is about 22,600. Treasury is about 5,700. So net debt is about 17,000.
Right.
And Novelis had $4.6 billion of debt, $900 million of treasury. So about $3.7 billion of net debt.
Right.
Converted is 51,000 gross, 12,000 crore treasury, and 39,000 net debt.
Perfect. Thanks a lot. That's all from my side.
Thank you. Next question is from Ashish Kejriwal from IDFC Securities. Please go ahead.
Yeah, hi. Thanks a lot. So, in terms of coal sourcing also, is it possible to quantify what was our coal cost per unit in this quarter versus last quarter?
So we don't actually give you the coal cost. I mean, it's roughly around 3,500 rupees a ton, but what is more important for me is the rupees per million kilocal. So we are normally around the 900 rupees per million kilocal, and it's been flat at that, Q3 to Q4.
Okay, fair. And secondly, when we are saying that quarterly depreciation should be the same going ahead, are we assuming that the stripping expenses which we have taken this quarter, that will continue reporting like that? And
you see, you only have stripping expenses once. So when you start a mine, like we did in Katotia, you have a certain amount of overburden removals. You will not see that repeated. So when we open a new phase or you move to a new part of the mine, probably in a year or so, you could have a bit more stripping again. But it's not going to happen every quarter.
Okay. And so, is it possible to quantify what was that amount this quarter?
Because 65 crores in Q4.
55 crores.
65.
Okay. And sir, lastly, because now we started reporting Utkal Alumina also with standalone. So, going ahead, do we think that we are going to merge it with standalone?
You know, the legal entity merging is a little bit of a complication because the Bapri-Mali lease is tied to the Utkal legal entity. So we don't really want to take any risks with that. We think we can present our results together and convince you guys to look at it together rather than try to get an actual legal entity merge, which regulatory-wise is a bigger headache.
That's no issues. And sir, lastly, about Coal India linkage, because we require approximately 15 to 16 million ton of coal.
Yeah.
Do we think that incrementally also we are going to increase our linkage availability rather than the actual linkage which we got from Coal India?
Sorry, I didn't understand the last part of the question.
My question is that that 15 to 16, or you can say in FY19, how do we see 15 or 16 million ton of coal sourcing coming?
We don't see any problem as per current run rates from Coal India. You see, the problem that happens for us is that during monsoons or certain times, bottlenecks develop so that there is not enough rake availability, or the power plants suddenly don't do their planning and run out of stock, in which case Coal India starts to divert coal to those. So you get what I call all these distractions happening. I think just from a pure supply-demand basis, we should not have any problem FY18-19.
Okay. Fair enough, sir. Thanks a lot and all the best.
Yeah, thank you.
Thank you. Next question is from Sanjay Jain from Motilal Oswal Securities. Please go ahead.
Hi, sir, is it possible at some stage, we start getting this consolidated number every quarter like, some of the other companies?
Oh, we are going to give it. I mean, consolidated meaning with Novelis or Hindalco Utkal? Hindalco Utkal, you're going to get it every quarter now. Just the way we are saying
the total consolidated company including Novelis, because Novelis reports in a different accounting standards than India.
Yeah, I see what you mean.
No, but Sanjay, that doesn't have much of an impact in terms of the difference in the standards. There are only a few specific items which are different between Ind AS and US GAAP. I mean, I don't think it's going to materially impact the Indian reported number. And most of the analysts and investors do prefer that, they look at Novelis in dollar terms and in the context of their own business environment. So we are not very sure that this is something that is really required on a quarterly basis.
Okay.
Hindalco plus Utkal for sure.
Yes, that makes sense.
Sure. No, that's very useful that you're giving that number after cancelling inter-segment thing. Yeah, that's very useful. Another question is on your comments on average coal cost being flat QOQ despite the fact that Coal India has increased prices, and you mentioned in your comment that there is a better GCV of the coal. So this, is it just because of the better GCV of the coal, or is also because your sourcing basket between linkage, e-auction also changed? Or is that increase in the GCV, is that temporary spike in the GCV, or like it's a structural change in GCV?
I think that, first of all, I also said that the linkage realization was a higher amount compared to Q3. So we got more linkages volumes in Q4 rather than Q3. So linkage is at a much lower cost than the spot auction coal. So there were three impacts. One was the higher linkage. Second was the better GCV. Now, what is the sustainability going forward? I think, we have deployed a lot of our efforts to make sure that we get as best quality coal as we can going forward. And we are hoping that the linkages will continue. I mean, just to be clear, we are today at about 70% realization of linkage in Q4. We were less than 70% in Q3. Actually, even if we get 75 to 80%, which is what we have been promised, then going forward it should be even better. So the real problem is, of course, as I was saying, you have the monsoon coming in, the bottlenecks of the rakes, how the power plant stocks are. All this impacts how much of linkage we will get.
Correct. So, okay. So you wouldn't say that, on a like-to-like basis, the same coal was definitely expensive, but just because your mix, you had better linkages, so that's why it didn't impact you.
Yes, because the price went up by 11% for sure.
Okay. I just, when you said better GCV, I thought like although you paid a little higher price because of the price hike, but at the same time you got better coal also. So that's not the case.
Actually, what happens is that if you buy, for example, you pay for 3,800 GCV coal, normally we get much lower than that. So when we do our costing, we take the lower number. So if we can, for example, 3,800 GCV coal, we'll assume we'll get is 3,002, 3,003. If we can get 100 million cal more, then it is a lower cost to us. You get me?
Got it. Got it. So another thing related to this, Coal India is, talking about moving to GCV-based pricing. How will that impact us? Will our cost go up? If you have done any analysis on this.
I think that I would love for them to get there at a certain point, but it is a very difficult, practical thing to do. Because then you have to have very independent and very rigorous checking of GCV going on all along the chain. So my personal belief is that we are a little bit away from that.
Okay, thank you so much. It's very useful.
Yeah.
Thank you. Next question is from Ashish Jain from Morgan Stanley. Please go ahead. Ashish Jain from Morgan Stanley, you may go ahead with the question. Your line is in talk mode.
Hi, sir. Good evening. Sir, firstly on coal mix, can you just help me understand how was Q4 coal mix different versus full year 18 coal mix?
Wow. Full year 18 coal mix versus Q4 coal mix?
Yeah.
So, look, if I now take the full year coal mix, see, what happened in Q4 is that the e-auction coal went down 1 million tons, below 1 million tons, whereas normally in a quarter, we get more than 1 million tons from e-auction.
Okay. And that was replaced by linkage, basically.
So, so the linkage volumes actually went up.
Okay. Okay, fine. And then secondly, the comment you made on the potential Mahan expansion, as in when you do or the Aditya expansion, whenever we consider, would we, so the 90 billion number you indicated, it includes commensurate alumina also, or we would use the current 500 KT expansion for that?
We would use the current 500 KT. That's why we took that brownfield.
Got it. Okay, great, sir. Thank you so much.
Yeah.
Thank you. The next question is from the line of Bhavesh Chedda from Enam Holdings. Please go ahead.
Good evening, sir. So your 1600 crore capex number also includes maintenance capex for India?
Yes. It's the total capex. Last year we spent 1,100. This year we'll spend about 1,600. It includes maintenance capex as well.
And Novelis would be spending roughly 400 million, right?
Slightly lower than that, probably 370 to 380. But we are, for Novelis, we are looking at the growth capexes as well. So we could do, if we announce another auto line in Asia, then it could be around 400 to 410.
Right. And you mentioned a point earlier, 5,000 crore on downstream projects over 5 years. So this is what capacity number?
Another 300 KT capacity number.
Another 300 KT. And you're saying this is spread over 5 years, and every year you're looking at 8 to 10% growth every?
Well, at one stage, after 2 years, we'll have to put in a new cold mill, in which case it will not be every year, it will come in 2 years, meaning there may be 1 more year of flat, and then second year you will see another big jump. Hello?
Mr. Chedda?
Hello? I think we got disconnected there.
Yes, we seem to have lost the line from Mr. Chedda.
Yeah.
Well, due to time constraints, we'll take that as the last question. I'd like to hand the conference back to the management for any closing comments.
So, no, I think I'll just thank everyone. My last request is, again, we intend to publish Hindalco standalone plus Utkal going forward. We think that it explains the business much better because it's all for captive usage, the alumina. And we request the analysts as well to put consensus and all out as a combination. So with that, I thank you all for your attention, and thanks for the call.